Welcome back to Gold Rush Reporter. I'm your silver analyst, and today we've got a massive story to break down. One that could redefine the global balance of wealth, power, and technology. You've probably noticed that every time geopolitical tension rises, precious metals, especially silver, start to move in unexpected ways. But what's happening right now between the US and China is not just another headline. It's a signal that the world's financial order might be shifting again. And silver is sitting right in the middle of it. Here's what's going on. Over the past few weeks, we've seen rising friction between Washington and Beijing. The tension isn't just military or political. It's financial, industrial, and digital. And right now, both sides are quietly preparing for a new kind of war. Not with missiles, but with resources, energy, and currency control. China is tightening its grip on industrial metals and rare earths, while the United States is doubling down on strategic minerals critical for clean energy and defense technology. But here's the key point most people are missing. Silver isn't just a precious metal anymore. It's an industrial necessity. From solar panels to electric vehicles, artificial intelligence chips to military optics, silver has become the backbone of the modern industrial world. Now, let's look at the price movement. Silver's been climbing aggressively, while gold has been relatively stable. That's unusual. Historically, gold moves first as a safe haven, and silver follows. But this time, silver's the one leading. That tells us investors aren't just buying for protection. They're buying for production. Industrial demand is heating up again, and that's where the pressure is building. You can see this in the supply data. The Silver Institute reported another deficit year, meaning global demand outpaced mine supply by over 200 million ounces. That's the third consecutive deficit, and it's getting worse. Meanwhile, major silver-producing nations like Mexico and Peru are seeing declining output due to higher costs and stricter environmental policies. Add in the US-China rivalry, and you start to understand why silver could become one of the most politically sensitive commodities in the world. If global supply chains fracture, countries will start hoarding silver, just like we've seen with gold and oil. And when that happens, prices can jump not by dollars, but by multiples. Silver's momentum isn't slowing down, and the numbers back that up. Right now, the industrial demand for silver is outpacing mining supply at a rate not seen in decades. The tech sector, which once treated silver as just another component, is now realizing it's irreplaceable. From solar cells and electric vehicles to high-performance computing and artificial intelligence infrastructure, silver is no longer a luxury metal. It's a foundational material. This shift in demand is creating a silent war between governments and corporations. China, for example, is securing massive quantities of silver for its clean energy expansion. Their solar panel output alone accounts for nearly half the global silver industrial demand. Meanwhile, the US and its allies are trying to stabilize their own silver supply chains through new mining partnerships in Latin America and Africa. But here's the problem. These projects take years to come online, while industrial demand is accelerating right now. The result? A growing structural deficit that's driving prices higher even before retail investors start piling in. And that's the part most people don't understand. Retail participation hasn't even peaked yet. Once that FOMO wave hits, when silver breaks past its previous all-time highs, it's going to draw massive inflows from everyday investors, ETFs, and institutions looking for a hedge against inflation and currency debasement. Now let's talk about policy. The recent talk in Washington about new 50-year mortgage proposals and potential stimulus checks sounds like politics, but economically, it all points to one thing: more money printing. Every time the government injects cash into the economy, metals react first. Gold absorbs the shock as a monetary hedge, and silver amplifies the move through industrial growth. If stimulus payments hit in 2025, as some officials are hinting, silver could easily push beyond the $60 mark, especially if inflation expectations rise again. At the same time, we're seeing major investors reposition quietly. Institutional traders are increasing their exposure to silver miners rather than physical bullion, betting on leveraged upside from production bottlenecks. Companies like First Majestic, Pan American Silver, and Hecla are reporting forward contracts and investment inflows at levels not seen since 2011, the last major bull run. The geopolitical layer adds even more fuel. Sanctions, trade restrictions, and digital currency wars between the US and China are pushing nations to move away from dollar-based reserves. As countries diversify their holdings, silver becomes a natural companion to gold, especially for those looking to back new regional currencies or digital payment systems with tangible assets. All this points toward a single, unavoidable conclusion. We are entering a new monetary era, one where tangible resources like silver matter more than digital promises or fiat policies. If you've been watching silver's chart lately, you've probably noticed how it's behaving differently this time. The breakout above $50 wasn't a short-term pump. It's part of a broader structural shift. Normally, when silver spikes, we see a quick retracement as traders take profits. But this time, the dips are being bought instantly, which tells you one thing: smart money is accumulating. Institutional players are building long-term positions instead of short-term trades. What's driving that conviction is a mix of hard data and economic reality. Inflation isn't cooling as fast as policymakers claim, and the Federal Reserve's credibility is under pressure. Even the possibility of delayed rate cuts has done little to slow silver's rise. That's because investors are realizing that monetary tightening can't fix structural debt. It only delays the inevitable devaluation of currency. Silver thrives in that environment because it represents both a commodity and a currency alternative. Let's zoom out for a second. The last time silver hit $50 was back in 2011. At that time, global debt was roughly $50 trillion. Today, it's over $300 trillion. In other words, the financial system has become 6 times more leveraged, while mine supply has actually declined. If silver reached $50 when the world was in better shape, what do you think it's worth now when the system is drowning in debt? Then there's the supply side. The Silver Institute recently warned that global mine production could fall another 2% next year due to higher energy costs and stricter regulations. Recycling is barely keeping up, and industrial demand is growing faster than expected. We're talking about a projected deficit exceeding 250 million ounces, the largest shortfall in modern history. When demand outstrips supply at that scale, prices don't just rise, they reset. On top of that, major mints are already reporting shortages. Premiums on physical silver coins have jumped 20 to 30% in just a few weeks. That's a signal that retail investors are finally waking up to what's happening. Once the mainstream crowd realizes that institutional accumulation has already started, we'll see the same parabolic move we saw in gold back in the 1970s. Only this time, silver could outperform. Another factor worth mentioning is technology. With AI, 5G, and renewable energy expansion, silver is embedded in every key growth sector of the next decade. There's no scalable substitute. Copper, aluminum, or graphene can't replicate silver's conductivity and thermal efficiency at the same level. That gives it a permanent industrial advantage that no policy or innovation can erase. So, when you combine structural deficits, government spending, and unstoppable industrial demand, you get a perfect storm for silver. The setup right now is eerily similar to the early stages of the last bull market, except this time the fundamentals are stronger and global awareness is much higher. If the US government officially reopens and confirms the new spending plans, things could escalate fast for silver. The mix of renewed fiscal stimulus, potential rate cuts, and a weaker dollar would pour fuel on an already burning fire. Precious metals don't rise in isolation. They rise when confidence in fiat systems weakens. Every new dollar printed dilutes existing value, and that's exactly what investors are bracing for. The talk of $2,000 stimulus checks in 2025 might sound generous, but from an economic standpoint, it's inflationary. When consumers suddenly receive extra cash, spending spikes, and that ripple effect hits commodities first. Just like in 2020, when stimulus money drove silver from $12 to $30 in a matter of months, we could see a repeat of that scenario. Only now the starting point is already $50. That means the next leg up could push prices towards $70 or even $80 if conditions align. At the same time, the introduction of 50-year mortgages and extended debt programs signals that the government is trying to delay the inevitable, a financial reset. Stretching loans across half a century doesn't make housing affordable. It just hides the real inflation problem. When policymakers create artificial affordability through debt, the long-term result is asset inflation, and commodities like silver are the natural beneficiaries. Meanwhile, global demand isn't slowing. Industrial consumption from China, India, and the West remains strong, and the supply deficit continues to deepen. Major refiners are reporting tight inventories, and industrial buyers are locking in long-term contracts to secure access. This kind of behavior only happens when insiders expect further shortages. On top of that, central banks are quietly shifting their reserve strategies. Gold reserves are increasing globally, but silver is starting to appear on the radar for the first time in decades. Smaller economies and developing nations are considering silver as a reserve hedge due to its lower cost and higher utility. It's not just a monetary metal anymore. It's becoming a strategic asset. Let's not ignore the psychological side either. Breaking the $50 barrier has completely changed investor sentiment. That number isn't just technical. It's psychological confirmation that silver is entering a new bull phase. Once a market crosses its historic ceiling, traders no longer think in terms of resistance. They think in terms of discovery. How high can it go? No one knows for sure, but the setup mirrors the kind of explosive upside we've seen in other commodities after a generational breakout. If you connect all these threads, fiscal stimulus, government debt expansion, industrial shortages, and monetary shifts, it becomes clear that silver's next move won't be a small rally. It's shaping up to be a full-scale revaluation. When you step back and look at the full picture, it's clear that we're witnessing more than just another market rally. This is a structural transformation in how value is stored, measured, and protected. Silver sitting above $50 isn't the endgame. It's the starting line for the next phase of global revaluation. Every fundamental driver, from industrial expansion to monetary instability, is pointing in the same direction. Governments are drowning in record debt, central banks are cornered between inflation and stagnation, and traditional assets are losing reliability. Meanwhile, silver is quietly proving its strength as both a commodity and a monetary hedge. Gold may dominate headlines, but silver's outperformance tells the real story. The market is shifting toward assets that have utility and scarcity. We've seen this before. In the 1970s, silver surged nearly tenfold as inflation and monetary distrust peaked. The same dynamics are forming again, but this time with more leverage, more demand, and less available supply. Global mine output is declining, recycling isn't keeping up, and the deficit is now measured in hundreds of millions of ounces. That's not sustainable. Something has to give, and price is the first to react. If the US proceeds with new stimulus packages, rate cuts, and extended debt programs, it will only amplify the pressure. Currency devaluation is inevitable when spending continues without real growth. History shows that when paper weakens, hard assets take center stage, and silver, with its dual industrial and monetary role, is positioned better than almost anything else. For investors, this isn't the time to chase hype. It's the time to understand positioning. Whether you're holding physical silver, investing in miners, or tracking ETFs, the goal should be exposure before the next leg up. The volatility will be brutal, but the long-term upside remains unmatched. Every correction is an opportunity, not a warning. So as we wrap up this breakdown, the message is simple. Silver's breakout is real, the fundamentals are solid, and the window to position early is closing fast. Thanks for watching Gold Rush Reporter. I'm your silver analyst, and as always, I appreciate you taking the time to dive deep with me. If you found value in this analysis, don't forget to like, share, and drop your thoughts below. Where do you think silver's next resistance point will be? Stay sharp, stay informed, and keep your eyes on the charts. I'll catch you in the next report. Because in this new economic era, the real rush isn't in gold, it's in silver.